Well, I think, first off, the markets have taken a view in terms of the directions of Trump policy in perhaps the early days of his administration. And, there's two clear avenues. One is the fiscal stimulus and the infrastructural spending that boosts domestic demand in the United States. The other is the more divisive and perhaps less growth positive avenue of trade protection and policies to tackle immigration. And I think for now the markets have gone down the first avenue and are focusing very much on the domestic demand boost to the economy from the tax policies, and that really is the story in terms of yields and of course in terms of the dollar.
Now, Derek, it's Dominic here. One of the things that we've been observing in the stock market in the U.S. is the massive run-up for bank stocks because of all of this optimism about a steepening yield curve, whether that's going to be better for them or not. Is there any sense right now that interest rates can continue on this upward trajectory, or are we due for a pullback sometime soon?
Yeah, I must say I'm a little bit dubious. I get the longer term picture, but I do think that we have entered into a profound period of uncertainty. And, just look at dollar Asia today, for example, and dollar EMFX beyond LATAM and the Mexican peso. We're beginning to see the first signs of what happens when you have these sharp moves higher in US rates. And the first casualties is, of course, the carry trade. And that can start to create pretty intense financial market volatility and instability. And that could very quickly spread to equity markets. And before you know it, you could see some reversal in the positive sentiment that we've had. And with that, of course, the yield momentum in the United States could reverse as well.
So The Economist has a great piece that looked back to John Connolly, Treasury Secretary's statement. The dollar is our currency, but your problem. And that's sort of what's playing out right now in the markets, or at least in the currency markets, on the Trump presidency. Good for America, but what does it mean for emerging markets and for the rest of world growth? Is that going to be the new paradigm in the currency markets? And if so, what does it mean for some of those other currencies?
Well, again, it's about balancing up the positives and the negatives. And of course, the US economy is the largest economy in the world. And if there was a big boost to domestic demand growth, some of this appreciation of the US dollar versus these other currencies wouldn't be that harmful potentially, because the domestic demand global story would certainly pick up. What I would focus on somewhat is what the Fed do in response to this shifting in expectations. And of course, if you go back to October, we had Yellen talking about hinting at allowing the economy to run hot, signaling that they would allow an inflation overshoot. Now, Yellen is speaking next Thursday. Is she going to repeat those hints? Because of course, the balance of risks have shifted somewhat. And if the markets start to get a sense that the Fed won't respond to rising inflation expectations, the sentiment could again turn negative, and it's not necessarily
they're not going to raise rates in December as the market expects?
Well, yeah, bringing it shorter term, I would certainly not be as confident. It's 75–80% priced. Prior to the election, we thought they would move in December on a Clinton victory. But, I think, again, the profound period of uncertainty and the assumption that the markets will remain orderly through until the 14th of December is a very big call. And I'm certainly not confident that that will be the case.